Tesla is no longer just selling cars, it is quietly building multiple trillion-dollar business engines at the same time. Hi, this is Ken. Welcome back to Life in the Future. Today I want to zoom out and talk about what Tesla is really becoming, not what the stock did today, not the daily headlines, but the deeper structural shifts that are happening inside the company. Because when you connect today's updates together, a very different picture of Tesla starts to emerge. We're seeing movement in Tesla Semi, changes in how FSD will be sold, strong export activity out of China, slow but deliberate progress toward robotaxis, and a noticeable shift in how serious investors are talking about Tesla. Individually, each of these might seem like small stories. Together, they tell us Tesla is transforming from a car company into a platform company, and that matters a lot for long-term investors. Let's start with Tesla Semi. Recent reports suggest Tesla Semi pricing is coming in around the mid $200,000 range for the standard version and closer to $300,000 for long range. At first glance, that sounds expensive, but focusing on sticker price completely misses the point. The real story is that Tesla Semi has entered what I call the serious evaluation zone for logistics companies. For the first time, fleets can realistically compare an electric truck against diesel using total cost of ownership, not emotions, not environmental goals, pure math. When companies run fleets, they don't ask, is this vehicle cool? They ask, does this reduce my operating costs? That's where Tesla Semi becomes extremely dangerous to competitors. Total cost of ownership includes a lot more than purchase price. Fuel, maintenance, downtime, parts replacement, utilization rate. Diesel trucks have thousands of moving parts, engines, transmissions, exhaust systems, after-treatment components. Tesla Semi removes a huge amount of that complexity. Fewer moving parts means fewer failures. Fewer failures mean less downtime. Less downtime means more revenue-generating miles. On top of that, Tesla claims Semi can recover a large portion of its range in roughly 30 minutes of charging. In long-haul logistics, time literally equals money. Every minute a truck is parked is a minute it is not generating revenue. So faster charging is not a nice feature. It directly impacts profit margins. This is why Tesla Semi isn't about being green. It's about becoming an operating cost weapon. Here's the bigger pattern. Commercial EVs will likely reach mass adoption before consumer EVs. Why? Because businesses decide with spreadsheets, not feelings. If the numbers make sense, adoption happens fast. We saw this with cloud computing. We saw it with automation software. We saw it with warehouse robotics. Once fleets begin switching at scale, infrastructure follows. Charging depots get built. Service networks expand. Suppliers adjust. Tesla Semi isn't just selling trucks, it's pulling an entire ecosystem forward. Now let's talk about China and exports. Monthly sales numbers jump up and down. They always have. But the more important question is this. Are Tesla factories running? Are vehicles still being shipped out globally? Recent data suggests over 50,000 vehicles were exported from Shanghai in January. That tells us something important. Tesla's manufacturing backbone is still very much alive. Shanghai remains one of the most efficient auto factories in the world. This gives Tesla flexibility. If demand softens in one region, Tesla can redirect supply elsewhere. That global optionality is a massive strategic advantage. It's one of the quiet strengths that doesn't show up in daily stock headlines. Now, let's move to full self-driving. Reports suggest Tesla is preparing to end the one-time purchase option and move fully to subscription. This is a big deal, not because FSD is perfect today, but because of what this says about Tesla's long-term thinking. One-time purchases create lumpy revenue. Subscriptions create compounding revenue. If Tesla adds more subscribers each year and keeps churn low, revenue stacks. This is the same model used by software giants. Microsoft, Adobe, Salesforce, Netflix. Tesla is signaling that FSD is no longer a feature. It's becoming a service. Here's the deeper layer. Tesla is designing FSD as a product people may pay for over 10 or 20 years. That changes how we should categorize Tesla. Instead of a company that sells hardware once, Tesla increasingly looks like a software platform with recurring revenue tied to physical devices. Cars become distribution nodes. This matters enormously for valuation. Software businesses are valued differently than automakers. Higher margins, more predictable cash flows, higher multiples. Tesla is slowly migrating into that category. Now let's talk about Cybercab and Robotaxis. There's noise about trademarks. There are reports of delays. Elon Musk has said the early ramp will be slow. None of this surprises me. Tesla has followed this pattern repeatedly. Model 3 production was slow at first. Model Y was slow at first. Tesla tends to struggle early when introducing radically new manufacturing approaches. But once the system works, scaling happens fast. The company prioritizes scalability over speed. This frustrates short-term traders, but it benefits long-term investors because Tesla doesn't just want a robotaxi. Tesla wants a robotaxi platform that can scale globally. That takes time. Now look at how prominent investors are starting to describe Tesla. More and more, you hear the word robotics. Less talk about cars. More talk about AI, autonomy, and automation. This shift matters. It means the market is beginning to frame Tesla as a technology platform, not just an EV maker. That narrative shift usually happens before the financial numbers fully reflect it. When you step back, you can see Tesla building multiple revenue engines at the same time. Commercial EVs through semi, global manufacturing and exports through passenger vehicles, recurring software revenue through FSD subscriptions, future mobility services through robotaxis. Most companies would struggle to execute even one of these. Tesla is attempting all of them inside one vertically integrated ecosystem. That's ambitious. It's risky. But if even 2 or 3 of these engines scale successfully, Tesla's future earnings power looks very different from today. So when you see Tesla stock move up or down on any given day, ask yourself this: did Tesla lose its manufacturing advantage today? Did Tesla abandon its software strategy today? Did Tesla cancel autonomy today? Usually, the answer is no. Short-term price movements are noise. Long-term business model evolution is signal. From a long-term investor's perspective, the key question isn't, will Tesla sell more cars this quarter? The real question is Tesla successfully transforming into a multi-platform technology company? Everything we discussed today suggests the answer is yes. Slowly, imperfectly, but deliberately. I'd love to hear from you. Which of today's developments do you think will matter most over the next 5 years? Let me know in the comments. If you found value in this analysis, please hit the like button. And if you want daily, long-term focused Tesla insights, make sure you're subscribed. Thanks for watching. And as always, let's enjoy the future together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.